Good morning, everybody. Mike Bakke, Princetontrader.com here for ntmarkets.com with your Wednesday morning pre-market webcast. Okay, more of the same here. Really just more of the same. What you've got is, at this point, we did the highs yesterday at 79.75. At this point, we're exactly in the area that I was discussing yesterday about how an established high becomes a magnet for price. Okay, and if you missed that, check out yesterday's webcast. It's just a couple minutes long. So now at this point, price is getting pulled towards 85, 86 to test it out to see if it's a double top. I doubt very seriously that it's going to be a double top. I'm sure it will pause there, but probably not for very long. What I'm seeing now is a move to the upper band, which is coming in around 1994.56. That should tell us one of two things. Either we'll just go ahead and touch the upper band and come back down, which can happen. But what's been happening more often during the course of this uptrend is that we ride that upper band for a few days, and that could take us in excess of 2,000. So I just want everybody to be aware. Everybody bristles. You say 2,000 and people instantly bristle and they look at you like you're a space alien. But look. People bristled at 1,300, then they bristled at 1,400, 15, 16, 17, 18, 19. You got to trade what you have. And what we have here is an uptrend. I mean, we were short where we needed to be. We got long down in the 1890s, and we took advantage of the dip on Friday. I'm currently long 43.25 still. I took some off yesterday at 73.25, but I'm going to let the rest run. One of two things is going to happen with the remainder of my position. I'm either going to get stopped out a lot lower from here, or I'm going to ride it into the upper band, and I'll take it off up there. But I'm not going to just take it off here because we're up X number of days, we're up X number of handles. I really dislike the argument that we have been moving straight up off the 1890 lows. I don't think that's a valid argument, and here's why. We moved straight up from 1890 to 1961, but all that changed on Friday when we flushed out. We traded from 61 down to 37. That did two things, okay? It flushed out, washed out any overbought condition that was in the market. That was number one. Number two, it created a new squeeze. We had the squeeze off of 1890, now we have the squeeze off of 1937 because it caught a lot of shorts leaning hard and deep into that news looking for lower prices, and it didn't pan out for them. So when we flipped on Friday, when we bounced, we have a whole new squeeze going on from 1937 to 1979-75. Now, we've got a lot of news events coming up this week. This afternoon's the Fed minutes. That doesn't really get me going much. I think it's a little more important this time because the Jackson Hole Conference starts tomorrow, and Yellen is speaking Friday morning at 10 a.m. So we're going to start to see all the Fed wheels start to churn again, and there's some definitely some catalyst potential out there. The geopolitical stuff is still going on. Could we turn on a dime today? Yes, absolutely. And the reason I always take profits on the way up is because of a day like Friday. You never know when that next thing on your news ticker is going to be a big deal. There's a lot going on in the world, so don't be greedy if you're long. You should, whether you are long from way down below or whether you are long from Friday, you should have taken at least half of that off by now. I mean, if you trade full time or you intend to trade as a business or as a serious supplement to your income, you need to take profits. This is a business. It's not who can get the biggest gold star for holding the longest, because a day like Friday will come on and boom. You were at 61. I mean, the bulls were looking great before the news, right? I mean, there was nothing to stop us, kind of like right now. And then, boom, one headline, 37. Where'd all my profit go? Out the window. That's where it went, because you didn't take advantage of it before. Now, there's a distinction between doing that and getting out too fast. Don't just dump it all. Take a little bit and keep some, and scale out of it as you head higher. People have no problem scaling in. They have a big problem scaling out. So we talk about that a lot in the room. Okay, everybody have a good one. Follow us on Twitter at Princetontrader. Check out the website. Come check out the chat room. A lot of people are in there now as free trials. They're going through their trial period along with all of our members, and come and join us. I think that you will find it to add value to your trading. I think that if you trade this stuff all the time, that it will help you, and you at least owe it to yourself to check it out. Okay, take care. I'll be back tomorrow morning with another webcast. Trade them well.